Hey Manoj, good evening. How are you?
I'm good, Mukund. How are you?
How was your week?
Week was good. Initially made some small losses because of this failed breakout kind of thing which happened yesterday, and then recovered all of it and made some more money today.
Good, good, good. This week was actually very, very strange.
Yep,
If you look at the end of the week, the indexes were barely moved. But during
right.
the week, they went up and down. I mean, for the week, the Dow was just up or off point, 1/10 of 1%. The
Yeah, yeah,
Nasdaq
yeah.
was off like 0.5 tenths of 1%. The SPY was down 5 tenths of 1%. But it feels like we've gone through a big journey up and down, and I'm
Right,
just happy when the markets were choppy. I'm just happy to sit back and like, okay, do what you have to do. We had two big
right.
things. I'll just quickly go through both of those. Oracle actually had decent earnings, but cloud growth slowed dramatically. You look at
Mhm.
Oracle's earnings, they projected to have revenue in the $12.47 billion range, and they ended up reporting about 12.45 billion. Cloud growth was the slow. That's why the stock went a little bit down. And then $1.19 in earnings, which beat estimates. But if you look at the stock, it was remember, we talked about it last week. It was near its all-time high.
Right.
And then that was at the resistance, and it
Yep.
just all the way down to the support. Uh, just on
From
just on
resistance to
one
support
day.
all the way, huh?
Yeah, yeah. I mean, I kind of knew that it was a hit or a miss. Like we talked about last week, it could either go
Yeah.
all the way out or it could go down, but it just exactly hit near the support where I expected it to go. 111 was actually a good support, and then if you look at it below that, there was a couple of other support points as well, but did okay. I think it's just taking a break. And then the other
Right.
one was Adobe. Adobe also announced actually good earnings, but again, a sell off after the earnings. Adobe actually went down another 10% today. Yes, earnings were yesterday. Earnings were actually good. They beat both the guidance on revenue and the guidance on earnings. 4.89 billion in revenue, about 4.9 cents in profit EPS, and still the stock went from roughly about in the range of about 200 552 down 23 points to 528.
Hmm.
Still
Over
in the zone,
5% downtick.
still in a and it's already gone to on the daily, it's gone to the 20 past the 20, it's gone to the 50-day moving average. So I would expect it should find a little bit of a bounce over here or a little bit near 505 and then begin its journey back again up. The reason was because they said that the AI revenue boost is not going to come anytime soon. It's going to come a little bit later.
Okay.
So that's Adobe and Oracle, the two big earnings this week. Let's just quickly go through, Manoj, how we did on the SPY, IWM, and also the QQQ with DIA.
Yep. Let me just expand my chart so that I can explain it properly. Okay. So I need to talk quite a few things about here. Let me just show up all the things that I need to show. Initially, I mean, you might look like, it might look like as if it's a very clumsy chart, but there is a reason why I have drawn all these things for our viewers to understand. So what happened was there was this inverse head and shoulders which was shaping up all through the last week. In fact, for last couple of weeks, it was shaping up. Okay. And there was expectation. So apart from that daily head and shoulder, which we talked about last 2 weeks, there was this inverse head and shoulders on the 4-hour chart. And as I have been always been talking about that, whenever there is a higher time frame and the lower time frame, chances are that a higher time frame will prevail eventually, and that's what happened this week as well. While this inverse head and shoulders on 4-hour chart did give us a breakout just above this neckline, and this breakout immediately failed. Failed like today. I mean, yesterday it reached dilly-dally today in the morning, yesterday in the morning, and then just failed out big time. There was no big news as such apart from the economic data which was there, and it wasn't as if yesterday there was no big news. Yesterday also there, the day before yesterday also there was economic data, but market just decided that they wanted to sell off today. And what happened was this breakout, which was supposed to take us past, it actually failed big time and then failed in a way wherein it failed, it resulted into a breakdown of a rising wedge. So inverse head and shoulder broken out reaches exactly at the upper end of the rising wedge, and then breaks down, failed breakout, and then breaks down. So the learning for the viewers that I would like to share here is there are breakouts and there are breakdowns, but there is a reason why breakouts many times fail. Why? You need to actually go back and look into what your daily charts are showing. So if I hide this, in fact, if I hide everything, I don't want to hide everything together because I need to have them for better understanding.
Manoj,
So
right click.
Here we have this.
Drawings.
I'm sorry.
Do a right click over there and say clear all drawings at the bottom. Remove drawings.
No, so the reason I do not want to clear all drawings is because I actually need other drawings. So I need the supply zone and demand zone. That's the reason I'm not removing them. Okay, so we have this. Which was already forming on the daily chart. If this daily, this in the head and shoulders on the daily chart was supposed to fail, we would have actually risen all the way towards this high of 4600, which we didn't go past. We in fact couldn't even cross this 4-hour supply zone, which is exactly around here. 4540 and 4560. This was a supply zone. It failed. I mean, it crossed past it and then immediately sold off. So these are the signs that we normally look for in terms of failed breakouts and failed or other breakdowns and breakouts. And although I did not buy here and I didn't even sell exactly at the top as well, because I was looking for, because what happens is many times, even if it breaks out, it comes back down to the breakout line to back test. So there is a difference between back test and breakdown. Is where failed breakout is after the breakout, it should just come towards the point of the breakout and should not come all the way towards the lower point of the breakout. So this time it broke out, came back at the breakout point and then failed and then broke down even the rising wedge. So that's the clear signal that market does not want to go up anymore, and chances are we would actually be breaking down somewhere below this as well. So that's the learning for me for my viewers. That's I wanted to share. That's about it. I would assume
most breakouts break down, right?
No, all the breakouts and breakdowns usually result into backtest. So let me just show the sign. So yeah. So this breakout happened here, which was around 4537. It should definitely backtest somewhere around here. 453. It should have come to 453040, but in a slow and gradual manner, not in a fast manner like this. After this backtest, it should have risen again in a smooth manner, which it did not. Fails, gives up on all the EMAs on the 4-hour and 1-hour, and then goes way all the way towards the 200 EMA of the 4-hour. Clear sign that this breakout which happened was a failed breakout. Normally, anybody who is buying a breakout would either buy here at the breakout or would buy again at the backtest, but with a very tight stop. If the backtest also fails, which means your breakout is done with and you are actually in trouble if you are long.
Got it. Okay, that was the SPY. How are we doing on the QQQ? I would say similar, right? The SPY and
very
the
similar.
have been.
So there is some other learning that I would like to share here. So again, if you so apart from this breakout which failed, just look at this particular channel which was broken out somewhere here. So broke out, backtested. It did not fall further much. It just kind of dilly-dallied here and then again rallied. So this is a classic sign of backtest which is resulting into a rally. Here the backtest failed, and here the backtest dilly-dallied around here and then went back and rallied again, made a new high. So this kind of setup is what we look for in terms of the breakout, backtest, and then backtest and rally. So in terms of what's shaping up for QQQ as well, I would expect again somewhere around here. So 15150 kind of level should be seen again, is what my assumption is.
Wow,
in
that's
terms of Nasdaq futures.
Almost 200 points down from here.
Yes,
that's not too bad. You would probably expect that.
Definitely not too bad.
Today it went down 200 points.
I'm sorry.
Today Nasdaq went 200 points, so that's not a lot. It seems like it should.
Yep.
Also,
it doesn't look like a lot, but still. So this is the target of this rising wedge which has been broken down. if you look at the daily chart will give you some other setup. So it has given a big, so this red candle tells you a lot of story. This big red candle isn't small. Now, let me show you one more thing. What does the weekly says? Hammer, inverted hammer. On the ES, inverted hammer. And if I go to Dow Jones, that's a gravestone doji. All bearish setups. So weekly is what I have been, as I have been saying earlier as well. If the candles on the weekly and the setups on the weekly are showing bearish or bullish signs, you would rather be paying notice, because that's what markets have been driven for in the last 1.5 to 2 years. So this all the three charts are showing that, for next couple of weeks we should be careful. In fact, next week is FOMC, so I would rather be careful and not carrying very big positions. Of course, it's a big event, so we definitely do not. I normally don't trade the events. Yet I would not be carrying any longs. And given the candles pattern, I would rather be try and play into the shorts as against being on the long side.
The doji candle usually signals an inversion, I would imagine.
Gravestone doji. So gravestone doji and doji are two different candles.
Yeah, doji is just
so this one on so the candle of Monday 30th Jan, that's a doji. Next doji, this one also doji, but this one is gravestone doji. Gravestone doji
it went all the way down. It went.
Yes.
It closed at the low, as opposed to close in the middle or close at the high.
Yes.
That means the bears pushed it down as much as possible, even though the bulls tried to take it up.
Right.
Got it. Okay. How are we doing on the DIA?
So that's the DIA chart that right now I'm holding. It's a gravestone doji on the DIA on the weekly candle.
Wow.
And that's a very bearish. The reason I'm actually more bearish again on the, I've been saying this last week as well, that, I'm more bearish on DIA, which is Dow Jones, and Russell 2000, which is IWM. I'll show you why. So on both the charts, the bearish signals are, apart from these head and shoulders, even Dow Jones has the head and shoulders. Apart from the head and shoulders, it also has the rising wedge, which is on the cusp of a breakdown. It hasn't been able to make any new high. So in the last whole week, ES and NQ rallied. S&P 500 and Nasdaq rallied, but Dow Jones did not rally as much as the others rallied. So that's a sign of weakness. And then when it broke down and made a gravestone doji on a weekly. So I'm very careful, and chances are that it would actually result into a breakdown sometime, probably next week or next to next week. Again, next week is a crucial week, so definitely chances are that it might result into a breakdown. So I would be very careful on the Dow Jones and Russell 2000, which is this.
How are we doing on the three? Did we go through the last three? Last week you had mentioned 3 companies. All of them actually did well. Well, Qualcomm didn't do well because of one reason. They also had a long-term contract with, well, let's start with Disney.
Yeah. So Disney is what? So Disney, I was bearish about a couple of weeks ago. This is where we mentioned, I think, Friday. So it backtested. So there were 2, patterns that I showed. One was the descending triangle, and another was this falling wedge. Falling wedge, as I said, is a bullish chart, bullish setup, and descending triangle is a bearish setup. So right around here, it backtested and then fell all the way towards the towards lower than 80, 70, and 75, and then rallied all the way up towards the 50 mm. I'm not bearish Disney anymore as of now. The reason is, let me give you a weekly chart to make you understand why I'm saying this. So this is a weekly chart. I would say that whatever had to be done in terms of the descending triangle, it is done and taken care of. Most of the times, whenever a setup that that nears its completion, whether it is I have actually spoken about it in about last month, one of the videos. Whenever a setup is about to complete its completion, it wouldn't test the low. So, for example, it is a falling wedge, which is a bullish setup. In this case, at some point, it would stop touching this lower end of the wedge and would show a sign of breaking out. So it would touch again, come back somewhere down around here, may not make a new low, or maybe make a double bottom, and then rallies again. That's a second signal for me that the stock wants to rally further. So even if I was bearish a couple of weeks ago, I'm leaning towards neutrality now, and probably in the next couple of weeks, I may enter into bullish depending upon how the chart set up.
The RSI is also trending up, as you can imagine, because of a strong week.
Yep.
Qualcomm actually had news that Apple has continued to use the Qualcomm mobile chips until 2026. That was a contract. They had a beautiful green candle. When was this? On the day, a couple of days
This
ago.
was the day, right? 12th
Yeah,
September.
the 12th. Yeah.
Yes. So it still is in that inverse challenge dollars pattern, which is bullish.
Yeah.
But the way it has been, making lower lows and not being able to sustain the highs is something which is a worrisome sign. Unless it is able to sustain past 50 MA and unless it is able to make a new high which is past 117, I would be cautious on it. I mean, even if it is the pattern, but let's accept it. Head and shoulders is the, as a pattern doesn't always break out or doesn't always break down. Many a times, in fact, 60%, only 60% times that the head and shoulders, whether inverse or actual head and shoulders, they result into a actual breakout or breakdown. So even if it is a bullish chart pattern, I wouldn't be holding my breath. Hey, when is it breaking out? It may take time. It may even fail. So unless and until it breaks past 50 MA and crosses, makes a new high here, I wouldn't be holding my breath.
Manoj.
Yep.
I want to share something. Can you? There's one of the things that is interesting to me. What I did was I actually started to put together. So just stop sharing. I want to be able to share. Hopefully, I can get my screen up and running here. What I wanted to show you was, if you look at the mega caps, what I did was I put together a mega cap spreadsheet. As I've told you, I put everything in spreadsheets.
Right.
So I do
You're a
all of
master of
those in
spreadsheets, to be
spreadsheets.
honest.
So I'm going to go through my mega cap analysis really quick, just to show you what I've done and then give you a quick sense of what's interesting here. So I took a look at 33 mega caps that are in my tracking watch list, from TSM, Qualcomm, all the way down to Tesla. Okay.
Right.
And then I got the data about their price, their volume, their 52-week high and low, their trailing price to earnings. Because once you're a mega cap, you better have earnings. You're not going to fundamentally be able to do very well without strong earnings, right? Then I look at forward PE as well, the price to sales ratio, the 50 and the 200-day moving target, and then the 1-year estimate. So then I put an upside, which is target minus the current price, and what is the possible upside for the stock, the PE growth. So I did a lot of this analysis, and then I started putting numbers on each of these, saying which of them is number 1, number 2, number 3, all the way to number 33. If you look at 1 year forward, the top 5 companies, according to this, that would actually do well. Look at number 2.
TSM.
Qualcomm is number 2.
Qualcomm is number 1. So, okay, so the by LTM PM is what your number rating or the numbers is your number rating?
If you look at the average, that's what it has done. I've taken average of all of those by the upside.
Okay.
So number 1, TSM, Qualcomm, and then after that it is Broadcom, and then Nextera Energy and Pinduoduo.
Wow.
So if you look at these 5, I'm not saying that Tesla is going to do badly next week or anything like that, but if you look at it purely from a fundamental perspective, these 5 companies should do well.
So what's the basis of this numbering? I mean, how did you arrive at this numbering? Based on the PE or price to sales, or
look
what?
at these 5 criteria: the growth in PE,
Okay.
upside left in the stock relative to the highest to the average analyst prediction of the stock price,
Okay.
the percentage of the moving average from 50 by long-term price movement, and by next term price movement. And then you rank the stock in every one of these, number 1 to number 33. And then you take the average of all of those rankings.
This is something very interesting, to be honest.
Once you do that, you'll get quickly to understand that most of these companies, well, I did a little bit of a back test on last year's data.
Okay.
And I looked at 2022 data and said, okay, if you look at the same companies and you should put this on a list and say which companies are going to do well, the 3 companies that it said was going to do very well, of the top 5, 3 companies have done very, very well. It said the best value last year, but the problem is from January or even March to July of this year, we had a phenomenal bull run.
Right.
So
Apart
that
from that,
could
I don't
speed
know
things
if
up.
it is right to,
You're still on
judge
mute.
based on what last year was, because last
Manoj,
year
you're
was a
on
terrible
mute.
year. Last year was a terrible year for the market. So I don't know if that is. You cannot hear me? Let me see. Okay. Can you hear me?
Okay.
Can you hear me?
Yeah, now I can.
Wow, I don't know, man. Something wrong with my headphones, maybe. Okay. So I was saying that last year was a terrible year for the market. So I don't know if we have to, so what you were saying about, last year's back test against this year. So maybe we need to do it for previous 3 years or 5 years, because last 3 years have been very different from the normal markets point of view. 2020 was different. 2021 euphoric, and then again 2022 was completely terrible from the investors' point of view.
I would say the last 4 years have been very weird. They are not
Yeah,
normal
yep,
at all.
absolutely
2020, COVID, stocks went like this and then went like that.
right,
2022, they just kept going down because everybody
absolutely
was expecting a recession. And then
right,
2023, nobody expected the boom to come in as
right,
quickly as it did. And then,
right,
so, I could say I wanted to do a back test for a few years out, but
right.
my confidence is that these five will do well, but
Hmm.
it's never really sure whether fundamentals alone drive stock price
True,
movement, right? So
true.
you got to take it with a grain of salt. I mean, I like these four stocks. So really quick, what I'm going to do is talk about the earnings next week, and then just quickly go through one quick thing, which is the earnings for next week. Stitch Fix is one company that is coming up. Manoj, have you ever followed the stock?
Nope, hearing for the first time.
Yeah, Stitch Fix is a clothing company. Most people
Okay,
call it different things, but essentially a clothing company now below its IPO price. It is
wow.
ridiculously low below its IPO price. So I don't know why you would want to watch this stock. After a decent run up during the COVID timeframe, it's just cratered, as you can see. And then
So
since
it
then,
has wiped out more than 90% of the investors' value.
it's wiped everybody out.
Yeah.
The other company that is expecting to come out next week in terms of earnings is FedEx. From my sense, the UPS didn't have a great post-earnings move.
Hmm.
FedEx has been doing okay for most parts, but it's also gone through a huge run-up all the way from the November frame, right? From November, where it was 140 to nearly 100% up,
Right.
250. So not exactly 100%, but 80, 90% up. That's a pretty significant run. And it's running into the
That's a
resistance.
steep run, actually.
Sorry?
That's a steep run.
Yeah, and it's going into this resistance
Mhm.
zone at 268. So it's going to take a little bit of a break, and it's already done that so far. And it has some decent support, but I wouldn't be surprised to see it go a little bit lower and maybe test this zone somewhere in the 238 range. But we'll wait and watch what that does. And then the
Right.
last earnings that we are watching is KB Homes. Home builders have been doing very, very well, and they're expecting to continue to do well because the inventory of existing homes is not very good, but the new home build is going very, very strong. So KBH Homes is expecting to report earnings. It has been in a good movement so far. Most home builders have done well, but since the last 1 month, 2 months, it also has taken close to a 10% down on, like most of the stocks have done, 10 to 12% down, but still good moving stock. Watch this. I would be a little bit more bullish about KB Homes than FedEx, but that's just a few of the stocks on my radar. And earnings for next week.
That's interesting.
Thank you so much, Manoj. Thank you,
Thank you.
everyone.
Thank you, everyone.
Please
Do
subscribe to the
subscribe.
channel and send
Yes.
us your comments. BN Cruz, one of our viewers, he comments every week. He's such a cool guy.
And there is somebody called Raise as well. So thank you everyone for those comments. We will ensure that we reply to all those comments and we give you those. And as long as you like and you comment, it gives us an appreciation that yes, our work has been liked, and we would be happy to reply to your comments as well. So thank you.
Thanks, Manoj. Bye. Have a good
Thank you.
weekend.
Bye bye. Take care. You too.